90% of day traders quit within their first 3 years of trading. So in celebration of making it to the 5-year mark, I'll be sharing with you the 5 key lessons which took me years to figure out. Some of these include why there's no such thing as making it in trading, and why just memorizing a profitable strategy won't make you profitable. The best thing about trading is that you're your own boss, but the worst thing about trading is that you are your own boss. One of the biggest challenges in trading or running a business is keeping yourself accountable. Nowadays, information is so readily available. For example, in the fitness space, you have AI telling you what are the best stretches for your muscles, or you even have hundreds of influencers telling you what is the best exercises in order to grow a certain body part. But why does personal coaching still exist? It's simply a matter of personal accountability. People get the best results when they feel that sense of urgency, not just to do the thing, but to do the right thing. It was around year 2 or 3 when I finally developed a profitable system. So this means that I was trading with a back-tested edge. It means that I was trading with proper risk management. And I also developed the systems in place to follow the plan. In theory, this should mean I should be able to compound my account and just have a steady trajectory upwards. It turns out that in reality, you're going to eventually come across hard times. And in those hard times, you're going to make mistakes that were only obvious to you after the damage has already been done. In these instances, having someone to keep me accountable or give me an outside perspective would have came in handy. It would have allowed me to realize before blowing up that I wasn't trading at my A game. And with the capital that I wouldn't have lost, I could have kept that account and continued reinvesting it and scaling my capital. We get into trading because we have this fantasy of not needing someone to tell us what to do. And if you're listening to this video, odds are you're really similar to me. You trade because it fits your description of what a dream job is. You, to a degree, get to control how much money you get to make, and you also get to choose where and when you trade, just as long as there's internet. However, the more freedom you have, the more accountability you need. This means that when you make a mistake, because there's no one watching you, you have to keep yourself accountable. And this includes understanding what is a good trade and what is a bad trade. For example, a good trade doesn't mean that you made money necessarily. Instead, it means that you followed your rules, it means that you had good risk, and that the trade meets all of your criteria regarding your setup and entry criteria. A bad trade means that you didn't follow your rules. So for example, if you told yourself that you were going to walk away from the charts, but you ended up taking a trade, that is a bad trade. Another example is you used bad risk. So if you had a risk plan in mind, but you ended up over-risking or risking less because you were afraid to lose, then that is also considered a bad trade. So all of these criteria is what makes and differentiates a good and a bad trade. And accountability is so important because it means that you have to be diligent with the little things. If you get away with skipping over a few of your steps, those little things end up accumulating, and the effects might not show up right away, but over time, they end up building up, and that's how big disasters come about. And the number one thing that I try to keep in the back of my mind when I'm trading is to humble yourself before the market humbles you. But here's the thing. Self-accountability is really difficult. It means that you have to be truthful and transparent with yourself when you make those mistakes. And the thing is, most of these mistakes aren't just in the markets, but they can also be traced back to your everyday life. You develop the accountability and discipline when you've proven to yourself that you can do the things that you said you were going to do. So ask yourself, did you follow the diet that you said you were going to stick to? Did you go to bed at the time that you said you would? Did you walk away from the charts when you said that you were done trading? And if your answers to those questions weren't a definite yes, then how can you expect yourself to follow your plan in the heat of the moment? The simple answer is, you're probably not going to follow your plan, and nor should you expect yourself to. So going back to the original point, trading has its freedoms, and freedom is the biggest perk of why we get into trading. However, that very freedom is what allows traders to get away making the same mistakes, which keeps them unprofitable. Every action that we take has a compounding effect that we can't see today. Therefore, if your trading is sloppy and you find it difficult to keep yourself accountable with the little things, then start off and clean up the other areas of your life first. The second and most humbling lesson is that profitability takes time. So however long you think it may take you to achieve profitability, double or even triple it. When I first got into trading, I joined a signal service. And if you don't know what a signal service is, they pretty much tell you to get in at one spot and then exit at another. Usually you follow the orders of one single trader, or if anything, it's a group of traders who you basically follow the signals of. In theory, it makes trading sound so simple. All you have to do is just follow the orders of someone else and you get to make money. And I vividly remember this. I was 17, I was anticipating the day that I'd finally turn 18 just so that I can open up my own brokerage account. I had already researched the different signal groups that were out there and I knew for sure the one that I would immediately buy into as soon as it was 12 a.m. I was a little bit naive at the time. I genuinely thought I was going to turn my $500 that I saved up from birthday money and turn it into thousands, if not hundreds of thousands of dollars. However, once I finally joined the group, my reality was quickly shattered. The problem was that by the time they told everyone to get into the trade, price had already ran to an even higher amount. And here's the sad thing, when they told you to get out right here, price would have actually already started dumping. So not only were your entries worse, but your exits were also worse than theirs as well. And at some point, I got really fed up with the idea of relying on someone else to fish for me. So I quickly learned and came to the conclusion that the only way for me to make it in this game of trading is to learn how to fish for myself. And this was the very first instance of when I learned that it's going to take a lot longer than I thought it would. Once I left the signal service for good, I ended up on this 3-year journey of switching between different strategies, hoping to find the holy grail. So the cycle would look like this. I would typically learn a new strategy and I'd become really optimistic and think that it would be my one-way ticket to financial freedom. So with that optimism, I would apply it and I would start trading with it as soon as I can. And then I honestly would win a few trades. Usually those resulted in a few prop firm payouts or compounding my account. However, there always was a time where I encountered drawdown. And when I encountered drawdown, I couldn't help but think to myself that something was just no longer working anymore. So therefore, I ended up going back to the drawing board and learning a whole new concept, thus repeating the same process. However, looking back on this process, I learned that every single strategy you try, it doesn't matter if it's ICT, SMC, or whatever is out there, there's going to be profitable times, but more importantly, there's going to be times of drawdown. And don't get me wrong, in the very beginning of your journey, you do have to experiment with the different strategies that are out there because it's through that experimentation that you get to learn which one of those actually fits your personality type. It's sort of like dating and why most people don't end up with the very same partner that they first got with. It's usually because they have to find out and experiment what works for them. However, people can get stuck in a cycle of never finding their perfect partner because they get stuck in the very same cycle of being very optimistic about someone new, trying it out, and then realizing that it doesn't actually suit them and their goals. So they go back to the drawing board and try to search for someone new. And tying it back into trading, it's important that once you understand why an edge works and once you figured out that it actually meets or matches your personality, you have to stick with it long enough through the drawdown periods so that you can let the edge play out. I mentioned this example so many times, but if you had a coin that you could flip and it was a 50-50 chance of getting heads or tails, and every single time you got heads, you earned $4, and every time you got tails, you got $1, there's inevitably going to be times in a 1,000 size sample that the coin is going to land on tails multiple times, 10, maybe even 20 times in a row. But that doesn't mean that it's not profitable to keep flipping that coin. Therefore, if you don't have that long-term conviction of your strategy, you'll basically end up like me. You'll spend a few years going through the same cycle and basically just get nowhere compared to if you had just stuck with the same strategy. And on the bright side, I'm still alive, I'm still young, I have my fingers, I have a functioning mind, so I have time to learn from my mistakes, but most importantly, I get to share those lessons with you. And also, just to reset expectations, it takes a while to become profitable. Or better yet, have a long enough track record to even say that you're profitable. For example, personally, I don't think you can say that you're profitable until you've had maybe 3 to 5 years of actual green years. And this is because in the market, there's so many different cycles. You have bullish markets, bearish markets, and all of these different environments that you need to be exposed to as a trader. And in those environments, your edge will play out really well. It might play out extremely bad. So you need to know that you have the systems in place that will keep you from blowing up your full account when those drawdowns inevitably come. And here's the thing, you don't really develop the systems and the discipline to follow your rules until you are in the market condition where you are being tested. How do you know that you have the mental fortitude to pick yourself back up when the pressure of succeeding is weighing you down? The short and simple answer is that you literally will never know until you've gone through it. And when you do, it feels like you got pushed back all the way to square one. However, the traders who have the results which attracted us into trading in the first place, they got there because they learned from those mistakes. They essentially went through the very same experiences that me and you have gone through, except instead of identifying with those mistakes, they pick apart the actual lessons that they can get from it and put in place the systems to make sure that the very same mistake happens less frequently and the financial consequences are less as well. And also, you know how I mentioned that it takes 3 to 5 green years to really say that you're profitable? Well, you need 1 to 3 years of experience to get to the point where you would have your first green year anyways. And looking back, I definitely could have learned these lessons a lot quicker had I been working with someone one-on-one who was teaching me everything that they had already gone through. However, I was young at the time and I didn't have any money, so I was willing to exchange my time for money. So you may be wondering to yourself, what is the takeaway from this lesson? Well, there's two. The first is understanding that we get into trading because you can make so much money in so little time. And although this is the reality for some of the top elite traders, there's almost no point in expecting yourself to make a doctor's salary when doctors spend decades learning the craft, practicing it before they're actually able to start making money from the craft. It's important to reset your expectations and realize that it's probably going to take hundreds, if not thousands of hours on the charts just to become familiar with what's going on. And from there, it will probably take you another 100, if not thousands of hours of learning about yourself and putting in place the right systems, which allows you to follow the strategy that you outlined from the prior 1,000 hours. Setting slow expectations allows you to move smoothly, and moving smoothly is what allows you to move fast. And also, you're not just going to magically improve simply from watching podcasts. You have to actually put in the dirty work and implement everything that you're learning as well. The second takeaway is understanding that the top traders who make 7 to 8 figures a year got there through decades of experience. And this obviously is a long-term goal. And the thing with long-term goals is that you need to be patient with how long it's going to take. And you need to channel that urgency of getting what you want in the long term and putting it towards the short-term inputs. Ideally, you want to be so fixated on the small wins. For example, did you show up each day that you could? Did you follow your rules for the day? Did you walk away from the charts when you weren't supposed to and thus were able to prevent your account from being blown up? All of these habits are essential to follow. And it's even more important that you implement the right systems if you want to eventually be trading in the millions. I don't even know what it feels like to trade in the millions, bro. What the fuck? As a quick side note, if you're serious about becoming a funded trader, I put together something that will actually help you structure this the right way. It's called the Funded Trader Roadmap, and it shows you exactly how much you should risk, how to choose the right accounts, and how to actually scale across different firms once you're actually consistent. And because most traders don't struggle with strategy, but rather they struggle with consistency, I'll also be including my Consistent Trader Checklist. This is the exact end-of-day system that I use, which helped me build profitable habits and keep me consistent. I'll only be including this checklist along with the roadmap for a short window of time, but after that, it'll likely become a part of my paid system. If you want both, grab it through the link below while it's still available. And speaking of systems, the third lesson is that trading is a systems-based process. So this means that you need systems. Now, let's go ahead and define what is a system. So a system essentially is rules, criteria, and processes that streamline an input into a desired output. And having systems is essential in trading because when you are in the middle of a trade and your emotions are running high, you need to have specific processes and criteria that allow you to streamline those inputs into an output. So in this case, that output not necessarily is going to be coming out green for the day, but more so trading profitably so that we are likely to end up green over the course of months, if not years. And alongside this, when we make mistakes, we want to write out what was the input which led to that mistake, because the mistake is the output. So if we find out the inputs which led to that output, it means that we can focus on the specific inputs, change something so that the output is likely to be different, which in this case would be not repeating the same mistake. And most traders, they trade by themselves, meaning that they don't have someone who watches over them and makes sure that what they're doing is correct. So a lot of the times when you make mistakes, it's going to feel like guesswork knowing which input led to that output or what led to that mistake. And therefore, systems allow you to diagnose what is happening in real time. So when we have the right systems, we can actually tweak these criteria, these rules and processes so that the same input can lead to the different output. And to illustrate the importance of systems, I'm going to be talking about working out. If you've ever been to your local gym, you'll see that there's such a wide demographic of people. You have the oldies who are on the treadmill or they're just like on the machines, busting out 50 reps on the lightest weight. And then you have the broccoli heads or like the group of high schoolers waiting for a bench press. And don't get me wrong, in these gyms, people look fit, but they don't look like they work out. We think of working out as in, really muscular, really toned, really lean. But the regular person, when they say that they go to the gym, they kind of just look like normal people. And more often than not, it's not because that they don't exercise, it's because they don't have the systems that lead to a desired output. Again, not all the time do they want to look super jacked and super lean, but I'm just saying that when you have the right systems and you have the right rules and criteria, then it makes the output a lot more streamlined and likely to happen. And even if that output doesn't happen, then you can always adjust the systems so that the same inputs lead to the desired output. So going back to working out, what do you do if you want to look jacked? Well, it means that you need some type of progressive overload, which just means that you're lifting heavier than you did last time. And you also have to have a diet in place. Now, the thing with a diet is that you can track how many calories you are burning, but in order to actually have a lean appearance, you have to be eating less than you are burning. So therefore, the systems we need in place or the criteria we need in place is measuring how much calories we're eating on a day-to-day basis. Tracking statistics is super important because it's how we're going to actually adjust the system. So going back into trading, you don't want to just enter super randomly, but you want to have specific criteria that outline your statistical edge. And if you're simply adjusting things based off of only how you feel, it's kind of the thing with a diet where when you eat intuitively and you're not tracking how much you're eating, you're probably going to end up in the same position that you wanted to get out of in the first place. And naturally, on a year-to-year basis, month-to-month basis, you're going to have losing periods. And naturally, you'll have doubts such as, did my strategy just stop working? Do I need to backtest more? Or even in hindsight, it's like, do I just need to adjust my profit target because had I done that, then the previous trade would have hit the profit target rather than the stop loss? And in order to solve these doubts, having the right systems in place means that we're actually making decisions and adjustments on good statistical data rather than just shooting a gun in the dark and hoping that something hits. And the takeaway here is that, again, in order to make the right decisions, we need to be basing it on the right information. So start off with tracking your data. Some of the key metrics that you want to measure is how many trades did you take where your execution was flawless. Another point you can track is how many trades did I risk the amount that I said I would. So this can be on the execution basis, and with the strategy basis, you can track KPIs or key performance indicators such as your trade frequency, as well as your average winner R multiple, and also your win rate. And when managing your mental capital outside of the charts, one key metric that you can measure is how many thoughts did I have throughout the day pertain to a prior loss. So this can be when you walked away from the session red, or it can be when you're going through a drawdown, like how many thoughts in the day are you thinking to yourself like, man, I can't believe I'm in drawdown. So those metrics are super important because it gives you insight into how much you should be risking. So if you are risking capital that you can afford to lose, the thoughts of how much you're actually losing is going to be a lot quieter than when you're just risking money that you can't afford to lose. So with this data, that is how we are going to make the right adjustments. And even if, again, the output isn't what we exactly desired, by at least tracking the rules and criteria, then we can always adjust those so that we become one step closer towards profitability. This is essentially how professionals think about trading so that they're not just making random adjustments, but they actually have a plan in place and they're actually adjusting that plan so that over time they can become more profitable. If this isn't your approach with trading, then I hate to say it, but you're basically gambling because you're taking random chances on random variables that you quite literally do not know the actual probabilities of. However, a system is only as good as the foundation that it was built upon. If you build your strategy on a fad or just something that is trending on the moment, then inevitably, when the market shifts, it's going to fall apart. And that's why you need to understand principles and strategies. The fourth lesson is that understanding or memorizing a strategy is good to making money in the short term. But understanding how the market works is crucial for having long-term success in the markets. A strategy is a specific method that you use to achieve a desired outcome. And the big key differentiator is that strategies are always evolving. So a strategy you can look up on the internet is when this specific RSI crossover with this Bollinger Band, then I'm going to enter long here. Alongside this, strategies are always changing and evolving. And principles are the drivers behind why strategies work in the first place. And these principles are basically human psychology. So fear, greed, supply, demand, all of those are going to be unchanging, independent of the specific market condition that we are in. And the easiest way to kind of visualize this is through the job market. I noticed that every generation has a specific degree or career path that is heavily incentivized or at least pushed upon while those people are in high school. So for me, it might have been computer science. For people who were older, it could have been something like physical therapy. So essentially, these are the meta tactics. Well, if you played video games, it just stands for most effective tactic available. And these are strategies because they're always evolving with the times. And going back to what a principle is, it's just understanding that in the job market, there is a trend for a skill set which is in demand. And so the principle behind why these strategies exist is because it's based on the trajectory of the market. And in my case, because technology has become more and more intertwined with our lives, there is a increasing demand of computer scientists. And because computer science is a strategy to making money, that very same optimal strategy is probably going to change in the next generation of high schoolers. However, the core idea and principle of making money simply comes down to addressing the trend in the market, assessing a high value skill, and then learning and excelling at that high value skill. And then, of course, a principle of wealth is taking the income from that high value skill and investing it in assets that allow your money to work for you. But that's, completely out of the picture right now. And the danger of not understanding a strategy versus a principle is when the times change. So for example, if computer science ends up becoming something that is automated, or if for some reason we just don't need computer science or CS people, then yeah, their jobs are going to be going out. So if you categorize it as a strategy, you can understand that it's simply a matter of adapting and learning a new skill set, therefore assessing how the market is trending, and then learning that skill set so that you can continue to make money. And all of this relates back to trading because you watch me on YouTube, and on YouTube, you're going to see so many different new trending strategies. You got like ICT, SMC, Bollinger Bands or whatever. I don't really know I don't really know the newest strategy, but essentially there's always going to be something new. And the interesting thing is that to a degree, all of these strategies work. Like there will be a point in time in the markets where that specific strategy is able to capitalize or it works best in those specific market conditions. However, because all strategies work at one specific point in time in a market cycle, it means that your strategy inevitably won't work because that's how another one is working. And to illustrate this, if we just draw a random trend, those who would capitalize on this movement would make a lot of money. But if they were to try that same strategy on this movement right here, then they would lose money, right? So every strategy works, but not every strategy works all the time. And of course, because you're watching me on YouTube, you'll see that there are people who are making money in one specific condition of the market, but when that condition eventually adapts, you're not going to see them anymore. Instead, you're going to see the new batch of traders who are making money in that specific condition or that specific market. So therefore, because strategies, or at least the ideal strategy, is always going to be adapting, I highly suggest, and this is my fourth lesson, it's to study why and how the market actually works, because it's a principle, not strategy. What is a market principle? Well, it's understanding how exactly does price move a single tick? Like, how does it move up and down? It can be understanding why does the market move in a trend and in cycles rather than just a linear line upwards? Or it can be, why do large institutions, every time they're able to capitalize on a huge move, why is there repeat behavior leading up to that big move? And the honest journey of how your strategy is going to evolve over time is you're going to see repeat behaviors take place. And in order to make sure that you're not just curve fitting or using hindsight bias, meaning that you're not just looking at the most recent trade and then kind of basing your data on that, the only way to make decisions with statistical edge is to start off with the market principles. And as a side note, this is exactly why I don't really explain my strategy on the internet in depth, because sometimes on a month-to-month basis, there is one little thing which I tweak, which is based on my data and my new or refined understanding of how and why the market works. So therefore, it means that every single time I make a really small, tiny revision, I technically would have to make a whole new video on that. So again, that's the whole reason why I refrain from actually giving my strategy out there. So what can we actually take away from this? Well, you want to have a clear goal of what you want. So in this case, it can be profitability over a long period of time. And from there, you can assess what is a strategy I can put in place that will help me get to that desired outcome. And also, when you do use the optimal strategy for that specific period of time, you are going to get those results even quicker. Again, think about the uptrend and how those who have a strategy which works well when things are trending higher, they're just going to have more profits compared to the person who makes most of their money when the market is trending lower. However, most importantly, you have to be willing to adapt because your strategies are going to evolve over time. And when you're making these revisions, make sure that they are based on the market principles. And over time, this is how you're going to create your own unique edge. And most importantly, how you'll have the required long-term conviction to execute that edge day in and day out. And the fifth and final lesson, and it's something that I have to keep reminding myself to this day, is that you will never make it. There's no holy grail. There's no secret strategy which will save you from all of your pains. The journey of trading, and honestly life in general, is simply just a series of continuous improvements towards a defined goal. And with the price of long-term growth, you're going to experience short-term discomfort. So growth comes from discomfort because with everything that we've already done, we technically adapted. But assuming you want to continue scaling your capital in trading, it means that you're going to be seeing new numbers on the screen, and therefore you're going to feel and always feel some sort of discomfort. But here's the thing. If you're watching this video, your number one desire probably is just wanting to become profitable first. However, you also have to understand that a want is simply something that you don't have at the moment. So eventually, once you become profitable, there technically will be a new want or something that you don't have at the present moment. Simply put, once you achieve something, it becomes a past achievement and a want ends up becoming replaced with a future desire. I'm mentioning all of this because trading is already such an uncomfortable experience. You're going to be going through so much trials and tribulations on an everyday basis. And if there's one thing that I want you to take away from this, it's that most of the pain you experience and feel comes from the realization that you aren't yet where you want to be. However, on the bright side, because by definition you will never be where you want to be, it simply means that it's just something not worth obsessing over. So for example, in the present right now, once you obtain the money, guess what? There will become another future, or in the future, you will want even more money. Right? So therefore, I urge you to let go of that constant obsession to be where you want, because by letting go of that fixation on the future, then you're able to channel your energy towards the inputs that you need to do in the present moment. And as a side note, living in the present moment is where we experience most of the joy and fulfillment, not just in trading, but in life itself. And yeah, like I said earlier, trading is already such a painful journey that you don't want to add on more feelings of discomfort or more feelings of misery just from obsessing over the fact that you're not where you want to be yet. And for me personally, I've always had a bit of an obsessive personality. So that means that once I had a goal in mind, and growing up, it was oftentimes video games like GTA, I wanted to build a specific business, GTA Online, and I would kind of set deadlines for myself where it's like, in the next month, I want to have I'm not going to say it on YouTube, but I wanted to have this specific operation running. I wanted to have this specific stat maxed. However, the difference with video games and trading is that with video games, there is a finite objective, as in, you know what is the end goal. Trading, there technically isn't really an end goal. You can continue growing your capital and you can continue increasing your profitability. And alongside this, you have external factors such as inflation. So making $1 million today won't be the same as making $1 million in the future. So therefore, there's always this desire to want to continue getting a little bit better than you were yesterday. So trading is an infinite game. And mind you, I got these concepts from Alex Hormozi. I don't take credit in creating this. So with trading, your goal is to survive. Because when you're able to survive another day, it's one more day of letting not just your experiences and your learning lessons compound into the next, but on a quite literal basis, it is another day for your profits to compound into future profits. So am I saying that you should never feel good about yourself or that you're never going to have milestones that you can celebrate? Absolutely not. If you have your first payout, I think that that is a huge victory. Or if you had your first 5-figure winning trade or winning day, then yeah, that's also another victory. However, the overarching goal of trading, independent of how much you're making, is simply to survive and to trade in a profitable manner. And if anything, the only thing that really adapts is going to be your strategy over time, kind of like what I said in the prior lesson, and also how much you're risking per trade. So what you're risking today is probably going to change over the course of the next year or two when you continue compounding your account. And it was around November of 2025 when I just had more of my recent revisions. And obviously I had a mental high, as in I was very optimistic over the fact that this might be it. As in, this is going to be the new strategy that I'll implement that would allow me to basically print money, which I did temporarily. I passed a good chunk of eval accounts. I got a few payouts, and overall, I just had a really mental high because I was attributing most of my success based on the short-term results rather than the short-term process. After that, starting from December, I was immediately humbled. I went on a 14-trade losing streak after I had a 50% win rate. And what saved me was having the systems in place to follow my risk rules and also establishing the discipline from prior mess ups so that I can instead do the right things and actually preserve my capital for when my edge wasn't the most favorable in accordance with the ongoing market conditions. So the cycle looks like this, where you learn something new, you become really optimistic, thinking that it is the next or basically the breakthrough, and then it works for a period of time. But because markets work in cycles, you're going to get humbled. And when you get humbled, that's when you're going to learn something new. This cycle is a little bit different than the strategy because rather than changing your strategy every single time it stops working, this is just the cycle of learning. As in, you make a mistake and you can implement something new in the system so that you're less likely to repeat that mistake. But yeah, basically, the trading journey is going to look exactly like this, and it's going to happen multiple times in a single year. And obviously, when you learn something new, it means hopefully that one, your strategy is probably going to become a little bit more profitable. So a little bit more profitable plus. Your mental edge is probably going to become a lot tougher because you went through something in the past which helped build you into your mindset or thinking now. And your risk is going to become a lot more dialed in because you have a better understanding of how much you are capable of losing. So prior to the 14 trade losing streak, I thought for me personally that the most I could ever lose was going to be like 10 trades in a row. But it turns out that I lost 14 trades in a row, and it is what it is. So what did I do? I learned something new, and then I implemented a new system. So in this case, I adjusted my risk parameters so that I can stomach a 14 trade losing streak in the event of, or basically when, that 14 trade losing streak becomes a 15 trade losing streak or something in the future. So what is the main takeaway of this lesson? It's the fact that there's always going to be pain in trading, because pain is a byproduct of growth. And some of you will come to that realization and end up quitting because they thought that trading would be the one thing that would allow them to basically live a stress-free and free of any monetary struggles lifestyle. And when they learn that because of this lesson, trading is just a never-ending cycle of discomfort and eating shit, then they're gonna have to quit. However, of course, that mindset of thinking that there's one specific thing that can solve everything, like that comes with its own drawbacks as well. On the bright side, I want you to reframe the fact that experiencing pain is actually a good thing because it means that you grew. Simply put, us humans are really adaptable. So if it's the same exact stimulus, we most likely won't feel anything because it's not new. So therefore, by reframing in your mind that what you're going through is actually a good thing because it's allowing you to grow into that better version of yourself or become a better trader, then that is how we're able to utilize pain as fuel to continue getting better. And alongside this, here's the great thing. You don't have to trade perfectly to trade profitably. Of course, you're always going to be learning, so that means that you're not going to have everything figured out right away. So therefore, you have two goals in mind. Number one, you want to always strive to be a little bit better than you were the day before. And number two, you have to have a long enough runway. What does this mean? It means that you want to prioritize longevity so you can give yourself the most amount of clearance to continue messing up, but most importantly, the room and time to get back up. And as a closing point, it helps to understand and digest the fact that once you achieve what you want, there will always, by definition, be something new you will want. So therefore, do it for the daily growth, not the momentary achievement. And for those of you who made it this far, I want to offer you something. I'm doing a few free one-on-one trading audits for those of you who feel stuck, whether you're inconsistent or you're break-even or you just can't figure out what's not clicking. On the call, I'll be breaking down how your execution is, how your psychology is, and basically assessing what is actually holding you back so that you can instead invest your time on what is going to help you improve. This isn't for people who just want to get rich quick with one simple fix. However, if you're serious about improving and you know that you're capable of something more, then click on the link in the description below. I only take on 3 people per week, so grab a spot before they're all gone.